Welcome to Momentum Monday. Today is June 7th, 2020. Howard has a brand new haircut at the Navy shop. Looking like a Navy, Howard.
Yeah, I learned something. There's an underground economy already. A lot of these barbers were going to people's homes and now they don't have to pay taxes, or we succeeded in creating an underground economy in 3 months.
I'm not surprised. This is how the mafia was born during the Great Depression, right? When you forbid something.
By the way, Ivan, I'm coming to collect my payment tomorrow, and I'm bringing a hammer.
Sure. What payment?
I would last about a day in a mafia world. Yeah, sure. Here's my money. All right. Speaking of here's my money, the Fed. All right, walk us through the markets.
All right, let me share.
They shouldn't even call it the S&P anymore. They should call it the Fed 100.
Yeah. Let me go to, okay. So the Nasdaq 100 basically hit new all-time highs last week, which is kind of surprising considering that we actually saw pullback in biotech and in many software names, because there was a big rotation into small caps, into financials, restaurants, leisure, like anything that was hit really hard during the lockdown. Those sectors outperformed substantially. If you remember, a couple weeks ago or so, we were talking that the only way the S&P is going above 300, above its 200 days, there is a rotation into those so-called weaker sectors. But this is exactly what we saw. And if you look at the volume pattern, big green days come with big volume. So definitely a lot of accumulation in the past few days. And yes, I see people on social media talking about a lot of exuberance, how people with zero experience in the market are all of a sudden opening accounts, and something that, this must be a sign.
I would like to have that little experience at this point. I'd be doing better. I'd be doing better with less experience right now.
Yeah, exactly. And, maybe it kind of looks like the late 90s in a way, but the late 90s, that whole strong period lasted 5 years. So I don't think that quick to say, this is the exact top. That same exuberance can continue for many months. And what we've seen in the past.
Momentum Monday is not about calling tops.
Yeah. What we've seen in the past couple of months is that the market just does not care about any bad news. We had anything bad that you can think of, like a once in 100-year pandemic, 25% unemployment, riots and looting, but the market just keeps going higher. And this is what bull markets do. They just shrug off bad news and continue higher. So as you mentioned, last week we saw big rotation into small caps, into sectors that were hit really hard. Even though on Friday there was, maybe you can say that's a reversal candle. So maybe here the small caps will pull back a little bit and test their 200-day moving average. That's completely normal considering the big move they had recently. That would be normal to pull back and test that. Definitely saw a rotation out of software and out of biotech, which it's bull market's correct through sector rotation. I think it's completely.
Yeah, this was what you want to see. That little pullback, was, if that's all you get, I'm lost, but like you said, that's a good rotate.
Rotations make bull market sustainable, because instead of the averages, the market indices having a 5-10% pullback to just keep the exuberance in check, instead of that, we're getting just rotation from one sector to another. And last week we actually saw some pretty decent pullbacks in some of the software leaders, as money went to chase restaurants and airlines and financials. And financials had a huge week. And I wonder what Warren Buffett thinks right now with airlines.
Does anybody want to ask? Someone had a great quote. It's like, if you haven't looked like a fool, then you've never really traded. and the best traders dust themselves off. So he's dusting himself off. He's trimming his hair. You know, he's got the new Manscaped nose hair trimmer. Hopefully I sent him. And he's just grooming right now, waiting for his next big trade. You know, he doesn't like tech, but yet he owns a chunk of Apple. I don't think this is a market for people like Warren. You know, I don't blame him with all that capital to, wow, look at Apple. I can't blame him. And he's long Apple. So he's got his market. He's long Apple. He's long the banks. It's not like he's that dumb. And the airlines were a bad trade to start. And so to pick on him for selling at the bottom, if that's indeed what he did, and who knows if he owns the bonds or whatever the hell, you know, and who knows with his derivatives what he really owns. I mean, we know he's long insurance companies. And so he participated in this bounce as well. But wow, Ivan, as you go through these charts, I mean, a beginner me would be so miserable. You know, textbook trained investor would be so miserable because the textbook trade that's working is don't fight the Fed. And most kids won't learn that. Who's going to teach a kid that? Maybe in social media they hear that and they go, what the hell does that mean? But if we look at the S&P, I mean, you can see when they intervened. You know, back in March, all news was bad news. And they went to the playbook, and the playbook worked again. And you can't argue with, you know, if coach knew if you got Tom Brady, you go to Tom Brady. And the danger is it only takes one time for the playbook not to work, and it'll be the last time. So, you know, I'm old, so I've been too cautious. But luckily, an experienced me followed some smart people. And if we look at Boeing, which is one of the trades that I would never, ever do, if not for stock twits and Twitter and social media, is I participated and I rotated. And I'm a momentum investor, so I don't rotate very often. And, you know, it paid to rotate even for me. And then SPG was my other rotation play. And I shared these on stock twits, and, you know, I have a year's worth of gains in a week. So my decision, not knowing how to play rotation, is I have no real belief in retail, in bricks and mortar. And so the question is, do I run and hide with the gains? Or you're a swing trader, you'd run and hide after a win like this, correct?
Yeah, absolutely. I mean, after three, four up days in a row, I will take profits and just wait for pullback or just tight range consolidation to get involved again. There's no reason to give back 30% of your profits here. When
I won't. I sold some. But if we go look at a monthly on that, Ivan, and this is the premier retail. If we look at the, again, textbook 08 recession, the stock doesn't have enough history. I guess 1999, 2000 was a pretty big drawdown too. You can see coming out of recessions, we're just beginning. Now, I just can't tell if this is just what we had. This is more than a recession because people are there's a gray economy or there's an underground economy already. So it's never the exact same. History rhymes, and I'll look like an idiot for selling. It's hard for me because I own so many positions and you don't. You keep it much cleaner. And this bear market got me, and recovery has got me into a lot of positions. So I like to keep a clean sheet. And I'm like, you know, I'd like to sell the rest of this and book Simon property. But at the same time, if this is the beginning of a recovery, you know, this stock could easily see 140 to all-time highs at some point as they repurpose the real estate. I'm not that type of investor to hold that. And if we look at Boeing on a monthly, I mean, why sell now if that was the bottom? Because Boeing's going to see all-time highs again. You know, it's basically them and
Airbus
to control this. So rotation is fun if you catch it, and a lot of us caught it. But at the same time, I have no conviction in old economy, and so I'm torn right at this moment.
Yeah, I mean, also don't forget that there are a couple big macro trends that are happening right now. And last week I talked a little bit about them. I mean, I mentioned that the US dollar is starting just to starting to
Oh,
rise.
that's so all the macro guys were calling for a run on the dollar.
And I mean, weakening dollar, that's extremely bullish for
Okay.
stocks in
You mentioned
general.
that last week. You're right. You mentioned that. So that I don't
Right.
follow it that closely, but you're right. That was a
That's why
plunge
we
of the
saw
dollar.
emerging market stocks having one of their best weeks in a
Yes.
while.
I own Stone and Pags in my venture stock portfolio, and they just fucking doubled.
Exactly. And also
I
in
have
addition
no,
to
I
that,
can't, I didn't think about the dollar, but that is the reason.
we saw a spike in yields, so a drop in treasuries. So all of a sudden, interest rates are going higher, and the market is starting to price not just quick recovery, but also going back to growth. So these are some very two major macro trends that if they sustain, stocks can just continue higher.
Stocks and GHI, I still want to own the most inflationary assets, and those are rare assets. That's the NASDAQ 100, which is like nosebleed, hard for you to ride, but this continues to be my trade, which is rare assets. Rare, especially rare cash flow assets. You can see where gold is not acting like the rare asset you want it to be because it has no cash flow, nor is Bitcoin. They're stores of value, theoretically, because you don't have many use cases versus the NASDAQ 100, which isn't just, we're in this weird economy, Ivan, where we not only do you have rare assets, you have rare assets that are spitting off cash. And I've talked about this forever, but the NASDAQ 100 is a rare asset that fucking prints money. And I have to keep saying that to myself for it to make sense. Does it make any sense to you, what I'm saying?
Absolutely. I think it does make sense. These
Yeah.
are companies, they're only getting more powerful.
They've got, it's gold with a yield, with cash flow, with product lines that 8-year-olds and 80-year-olds use. Yeah, it's hyperinflationary. These prices, these are expensive by I don't count Oracle and rare assets. It's a conglomerate, but I don't even count Google anymore, although it is a rare asset. But it's the whole NASDAQ 100. If we look at Peloton, that's a rare asset that could keep inflating because they've won hearts and mind on the hardware. It's like a beginning Apple, right? They have the iPhone, which is not the iPhone at scale, but like they have a segment of users like Tesla that love their product, right? All I hear, because I'm long Peloton, is, oh, Nautilus, oh, it's expensive. The hardware is expensive. Oh, there's free apps that do the same thing. And that's what people would say about Apple. That's what people say about Microsoft. And yeah, the Peloton may not execute, but this is a rare asset that not only, well, it's a rare asset. So in an inflationary environment where the interest rates are low, Fed's printing, and the dollar weakening. So now people overseas can buy these, rich people overseas. As you see people in London have the Peloton. This could be a $50 billion brand.
Yeah, absolutely.
And so again, I can't base it on any current metrics. But the old saying of why isn't Peloton could be a value stock if you believe that this environment is going to persist of low interest rates, accommodative global markets, and a rare product that also has cash flow and also has many buyers that would love to own that asset at lower prices. So you kind of have a perfect storm, which makes it hard for someone my age to kind of with a straight face say, own growth stocks. But that's kind of, if you want to own growth stocks, that's the only story.
Yeah, it's just one of those newer concepts that might persist for a while. And another one is Carvana. And this is why people, if you read about the feedback, people love the experience of being able to order a car from their couch. And this is why the stock keeps trending up and it's just making new all-time highs.
It's a Phoenix company. I just avoided this whole, but yeah, they're kind of like restoration hardware of cars, I guess. I don't know. Certain things I'll just never understand the story because I'm not the participator in the story. What do you? I've been walked through a swing trade recently and talk about what a swing trade is for new. There's so many new
swing trades are typically last between 2 and 10 trading days. So you're just trying to capture a part of the move. So for example, last week, we had a quick swing trade in TV, which is a Mexican TV company. I expected some rotation into emerging markets, and I like the setup because of that bottoming setup and the tight range contraction candles here. With closing prices very close to each other. So we went long the stock. We also went long some June 19 $6 calls. They were like 30 cents, 25 cents when we entered it. Those things went to a dollar just last week. So we're just looking for high probability setup with good risk to reward ratio in swing trading. And in any given year, you have to be ready to take, several hundred, maybe 1,000 swing trades, and looking for high probability, high risk to reward. And even
cherry picking is just not the way to swing trade.
Yeah.
I guess if you truly swing trade, you're always cherry picking. But if you're going to follow somebody else's swing trades, make sure you take them in a bundle, not cherry pick one at a time.
Yeah, and I also, we did quite a few good trades in restaurants. When I saw that money is starting to rotate into restaurants here on Wednesday, I just went and look at the entire restaurant groups and saw which stocks are setting up, and just started buying calls on those restaurants. And many of them went up to 200, 300%, and Thursday, Friday.
I also think young people are going to love swing trading in an era of Robinhood and social networks where you can follow people like yourself. And eventually when there's copy trading, that'll be great too. But in an era of learn by doing, swing trading kind of makes sense to young people.
Yeah, I mean, short-term trading and you're trying to quickly grow your capital, and the main advantage is that, and your main goal is to keep your drawdown to a minimum. Like, instead of growing your account by, let's say, 20% and then giving back up half of that, if not the entire gain, when the correction comes, when you're doing swing trades, you make sure that you only give back 2%. So,
yeah, you were not comfortable with my style where I could give up 20% like in March.
Well, it's not for everyone. It's not for everyone. I mean, someone like you who doesn't have a lot of your net worth into the stock market, you don't care if you go through 20, 30, 40% drawdown. You know that in the long term, that stock will recover. I care because most of my money is in the stock market. So I manage it from a different point of view. And not everyone has the stomach. I mean, you have the stomach for big drawdowns. I know for myself that I don't. So because
I also have limited exposure to the stock market.
Yeah,
so I want big upside, big drawdown.
Even if you think that you'll be okay when your stock goes down 20%, maybe that stock keeps going down to, let's say, 40%. All of a sudden you'll panic and you sell at the bottom. So
it's happened to me. It happens to me, but I have a portfolio. But I think the differentiator in our style is why it works well is I know for swing trading, I allocate to other people and take their ideas, and I follow very closely. I try not to cherry pick. Where with my own growth investing, I know it's a small percentage of my net worth, and people know that, and I'm pretty clear about that because my exposure is to private companies where the drawdowns can be massive, but I'm in it for very long term.
Well, for better or for worse, you're basically locked in those private deals. So no matter what happens, maybe this is why you do so well in them, because you don't panic and you never sell.
Well, I have domain experience and I have and I'm used to being wrong. I mean, you can't just yell at the CEO and change course every day. So, but in the stock market, this is another one that I was calling in the March bottom is like these Latin American winners. I treated them as venture capital. I've kind of sold out of this one. But Stone to me looks like the most interesting.
Yeah, I mean, also in fact, I'm just showing it just to give another example of a good swing trade, because you have a big volume breakout, then you have sideways consolidation. Look at those 3 days, relatively tight range and the price is closing very near each other. So 3 days with closing prices very close to each other. Then you can buy here in anticipation. This is exactly what we did.
So what do you think? Those are just under accumulation. You're not sure which direction, and when it moves direction, you grab it.
Well, when you look at the volume pattern, first of all, it's already above a rising 20-day moving average, right? And you have a gap up here on earnings. And then when you have that tight range consolidation, you assume that there will be continuation higher. You're not going to be right every time, but that's why you have a stop here. If you buy a call option, you know that your risk is the entire premium. Like if you put $1,000 into call options, you know your risk is $1,000. You have to be ready to accept that. So you're looking for a high probability trade, established trend, range contraction. Also, industry momentum is very important. Obviously, when you expect money to flow into emerging market stocks, XP is an emerging market stock. It's a Brazilian stock. And then
you have the US dollar. You have the US dollar helping as well.
All those factors stacked up, you have a high probability trade in a rising market, and you take it. You don't know if you will be correct, but overall, in 10 trades, you'll be right in 6, and your average winner will be much bigger than your average loser. So you end up growing your capital.
So this week, what are you looking at?
I mean, this week, the market is a little bit extended, so we might see some consolidation, but there are still some interesting setups. I mean, I'm not super excited about them, but from technical perspective, there are stocks like Microsoft are looking constructive for potential breakout. I think
good volume.
Visa and MasterCard might try to catch up. I mean, if the thesis is that the global economy is going to recover, those two stocks should be back to all-time highs. Both of them are
long MasterCard, but yeah,
constructively. So yeah, I mean, Nvidia, even though the semiconductor index is kind of looking toppy, maybe we'll see some type of pullback here or sideways consolidation. Then stocks like Nvidia, AMD are kind of looking constructively. So I think it'll be a market of stocks. You need to be.
I'll tell you what, that AMD looks like a good swing for you if that gaps up.
Yeah, it definitely it's looking good. Nvidia and AMD are looking good. But as you said, there are a lot of stocks that are up 3-4 days in a row. So I don't think it's wise to chase.
Stocks that are up 30 days in a row.
Maybe. Tesla's not looking bad either, by the way. It's just everyone thought that this is the top and this is the end. But then there's a very insightful analysts that are saying that the bearish scenario for Tesla is like 1,500. So maybe there is room to growth, especially in stocks that are highly shorted.
Listen, there's not a millennial that doesn't want one. That matters. It's an aspirational brand that's affordable and performance-wise, everybody wants one. It's an iPhone with wheels. You got Peloton, Tesla, I guess Lulu.
Yeah, absolutely. I see everyone wearing Lulu right now. I mean, who is buying suits and shirts right now? Everyone is buying like leisure clothing that looks good, like Lululemon. I mean,
yeah, they're going to have hundreds of real competitors in the Shopify world. So I'm kind of done with it for the moment, Lulu.
And there are quite a few European brands that look better and are amazing. And if Lululemon is smart, they will just buy them because.
Yeah, listen, if I'm Lulu, I just know why they haven't been using their stock at a 50 billion valuation to do some tuck-ins right now or to go raise money.
This was the big.
At 40%, at 40 times, I don't know, 40 times 2022, no, 50 times 2022 earnings. It's a rare asset, but I don't love it as much as I like other ideas right here.
You make a good point because not acquiring good competitors and good brands was the biggest mistake that Victoria's Secret did. And look at what happened. They went from a $7-10 billion company Oh, it's
Especially on a
again.
commodity item. Lulu at some level is a high price commodity item at this point. Everybody has an Instagram account and anybody can market to those customers. So I just am not, as excited I was about owning Lulu in March, it doesn't do it for me here. Look at Nike breaking out though too. So I'm more bullish on Nike as relative to Lulu
Yeah, no,
at
definitely.
these prices.
It's interesting to see that last week was a big week for Chinese stocks. Like with all the talk about
Well,
tariffs.
Bubba's the rare. I mean, in the end, it doesn't matter what Trump says. Bubba's the rarest asset of all, and KWeb is a rare asset because they can't stop the digital Chinese wall.
Yeah, I mean, look at how
So,
Baba looked in the weekly. I mean, this is
yeah,
a
super
beautiful
bullish on Alibaba.
place.
I don't own it, but I'm super bullish. But they've thrown everything at it.
Yeah.
They don't need to cheat.
And then you have
They own China.
Net,
And that is look at Tencent breaking out.
a gaming company. You have look at that huge base.
Yeah, that's the one I'm most bullish on, but I just understand the business better than Baba, and they're spreading more to Indonesia. So which one's Billy?
I'm not
No.
even sure what they do. They're just, I mean,
Oh
they're
my goodness, Chinese internet stocks. Wow.
And it is, I mean, it makes sense because, they're doing business.
Well, they don't have competition at home. There's a digital wall. And this is with half of the GOP or all of the GOP asking us to ban Chinese tickers. So, I don't know if I'm rushing into Chinese stocks at this point, but you can see how everybody thinks Trump's full of shit because no one seems to be scared of Chinese. It's like I said when he talked down Alibaba 2 weeks ago, no one's really listening.
Well, if you have like interactive brokers, you can just go and buy them on the Hong Kong Stock Exchange, even if they're not traded in the
These
US.
kids are going to figure it out. They want rare assets. They want products they use. They want stuff with monopolies. Alibaba and Tencent are monopolies. And if you do your work, there's other Chinese monopolies. They have no US competition. So there you have it. Wow, Chinese internet. So KWeb is super interesting.
Oh yeah, it's been on fire. So what's your take on a potential infrastructure bill and which stocks you kind of think will benefit? I mean, we're starting to see some of those X starting to perk up a little bit, maybe in expectations that there will be an infrastructure bill, which, I mean, if you spend $4 trillion for...
He's going to spend. I mean, it's going to eventually, whatever it takes to get elected. So assume now that he has a playbook that's working, he's got Powell in his side pocket. It's very hard for the shorts here. If you're short, and I've tried a couple option trades. Friday, even I put on a few S&P option shorts. If it doesn't work in a day or two, it's just not worth it. I'm not doing it as a hedge. It's just a trade because it's so euphoric. I'm seeing so much sloppy behavior and cheerleading. And it's fun. Like making money is fun, especially when the establishment is wrong. Don't get me wrong. Like it's fun. But I've been there, done that, and this euphoria ends in tears most of the time. But doesn't mean you can time it. I just see the put to call is obnoxiously low. You have volume on the NASDAQ and penny stocks. You had Hertz, I don't know, going up 1,000% and it's bankrupt. You have, you shouldn't be rewarded for these things. But remember, it's still a bankrupt company. But I'm saying you have a lot of sloppy investing and a lot of things that young people should not be caring about, and they're talking about them. So, when that's happening, that's just a sign that the market can pull the rug. This is interesting from Ryan. I don't know a person that could have called this. There were more people that called the crash than there were, straight back to all-time highs. Let's just see, this is the fastest. What are we on pace for the fastest?
Yeah, kind of, yeah.
And so I count this two things. You got the playbook, you got the Fed, you got global coordinated easing. And I also would say this is the biggest wall of worry in the history of the world. Fascism, terrorism, riots, civil unrest. You've got chatter about a civil war. You have so many people unemployed. So you can't convince me. As bullish as I was in March on the VIX 90, I didn't have that much conviction, but I had way more conviction buying there than I would buying here. And that's the market just wants to fool the most people possible. And I literally don't know. It seems like if the market would love a 10% pullback, professionals would love a 10% pullback because it would make sense to them. Buy the upward trending, 200-day moving average. And then when they get that, they panic. So I don't know. Maybe it just doesn't let people in.
Yeah. Maybe, well, obviously, if you're underinvested, you would love a pullback, so you would buy the dip. But
everybody's underinvested. I mean, no one's fully invested. Maybe some 401k people who followed the rules, but they never looked at it, and they were nervous as shit when the markets were down 30-40%. So don't know, but I think that the wall of worry is in place. The Fed is printing, low interest rates. All the news is on the front pages. So I don't see the page 10 thing happening. The media is not helping us because they went all in on stay at home, and now they're all in on the riots. So what happened to, the coverage of, COVID? So maybe that creeps back to front page story, but it's fighting this kind of looks a nightmare. So, and how are you positioned? Just really light and just looking for ideas?
Well, I still hold a few call positions. Some of them in restaurant stock. I closed 3/4 of them. I still own a little bit, like Bloomin. This one, Chef, they supply restaurants, and I saw last week that money was rotating there. So I still hold a little bit of call options in those where I always assume that I risk the entire premium, but I already more than tripled my investment in them. And I own a few. I have like some small investments in Chinese company, like Bilibili's looking like setting up for a potential breakout. But I'm kind of cautious going into next week, just because on Friday we saw so many reversal candles, and we might see some consolidation. So on Friday, I even tried to.
Wouldn't be the end of the world. You're kind of.
Yeah, I mean, if there's a dip, it'll be welcome as a buying opportunity. I'm just looking at something like SMH, which last week I said that he's setting up for a breakout. He had a huge breakout, and now it's super extended above its 20-day moving average. So for me, that's I would not be chasing it here. I would just wait for a pullback for that moving average to catch up. And even on Friday, I tried to short it a little bit with VRSOX.
So did I. Which I'm saying I tried a little bit, and we'll see on tomorrow. But
it's a buy the dip market, but it's not chase extended stock market. Just don't chase stocks that are up indices that are up multiple days in a row. Just wait for a pullback or sideways consolidation. And since last week we saw a pullback in many biotechs. It'll be interesting if at some point we see a rotation back into those stocks. For example, this one is looking interesting. It already pulled back to its 50-day. It kind of bounced. So if it can trade above that high from Friday, you can buy it for a swing with a stop the low, and your first target could be here.
That's a little more normal behavior. These breakouts have pulled back. I'm looking at my typical stocks. If I look at Spotify, I still think rare asset pullbacks are getting after a huge breakout, it just keeps getting bought. Low volume, digesting this. That's what I call a textbook growth setup. And the other one is, Apple.
Yeah, Apple, Microsoft, both are looking.
I'm an Apple. I don't use Microsoft products. So, I mean, Skype, no. Teams, no. Email, no. Excel, no. So I'm not that person. Just to remind people, there's a risk out there. Look at Smartsheet, which is a stock that I follow. Like
Which one?
in SMAR.
Oh, yeah.
I don't own it, but you can see in a rare asset world, any disappointment it just met. People need to remember that everybody's chasing these rare assets. Just because you have a rare asset in a cash flow world, that's somebody else's margin that they're coming for. So there is no room for error.
Yeah, some of them will fail.
Zoom, what I think people are getting wrong is they come to me and they always go, because I bought some at 112, I think I was public, like about stepping in there for the kids and myself. I want to sell it. I mean, it makes no sense to me, but at the same time, the arguments of why Zoom won't be around are ridiculous. They're calling it, well, IM is not around anymore. Zoom is way different than IM. People are paying for Zoom at record rates. This isn't like a utility where it's free, like Twitter. Zoom is like legitimately fast growing company. But Slack is a good reminder. It's a rare asset at many levels, but Microsoft Teams commoditizes it. And any slip up, I think to be honest, when I'm reading, he blew the conference call. These young guys aren't as cocky as, Benioff on a conference call. I think some of these guys are learning that Wall Street, you can't just be happy-go-lucky. We could do better. No, you have to go onto those conference calls and say, fuck Microsoft. We've got 9 tricks up our sleeve. I was buying it there on Friday. Like, I just think Slack is a buy the dip company.
When you see something like this, when a stock will go 20, 30% before their earnings report, I mean, just take profits. Why would you risk it? The market has already given you a 30%.
That's also why people are chasing these. These are rare assets that have competition. So any slip up either on a conference call or on their numbers is going to be met with selling. Money is fast, and money, there's not that many monopolies in software, right? And that's why the FANG stocks continue to win. They are monopolies. They have massive cash flow. They are planets. And my job is to try and find the next planets. Lulu was a planet that I caught early. I don't think Roku is a planet. I think people are just way upside down on this stock. I think Peloton has a chance to be a fitness planet.
The other fitness play that I mentioned.
Spotify has a chance to be a planet in hearing. Which one?
I mean, NLS.
Yeah, but that product sucks. I've heard nothing but people returning it. No. Listen, there's nothing wrong with making profits. I'm just saying, own the best company. Don't own the bankrupt company. There's no way they're chasing Peloton, and so you can't fake it. Peloton is in the leader position, a true rare asset. Now, Peloton can misexecute, but Peloton has a chance to be a fitness planet, just like Spotify has a chance to be an audio planet. And those are the kind of rare assets that I'm trying to buy the dips and hang on to. Nike, like I talk about, MasterCard. You can't own them all, but you got to kind of figure out what you think is indestructible. Anyways, okay, good work, Ivan. Thanks for doing this.
All right, Howard, see you next week.
See everybody next week. Have a great week.
All right.